This is the continuation of report of Ms. Bati. Trend analysis. Trend analysis, also known as the pyramid method, studying the operational result and financial position over a series of year and trend analysis. Calculation of ratios of different items for various periods is done and then compared under the analysis. So, the trend analysis is an accounting can be used by management or the analysis for forecast future financial statement. It is based on the idea that what has happened in the past give traders an idea of what will happen in the future. So the trends serve as what we call attention directing because it nagpo-focus ng attention doon sa mga trends in comparison with the industry standards. For example, there is the sales and net income item for past 6 years as follows. Here, the trend percentage are calculated as the current year divided by the base year. For example, 261,000 divided by 216,000 is equals to 1.208 or 1.221. And sa net income, ganun din, and 33,840 divided by 29,700 is equals to 1.139 or 114. Next is the ratio analysis. Ratio analysis is a quantitative analysis of information contained in a company's financial statement. Its ratio analysis. It is described the significant relationship which exists between various items of a balance sheet and statement of profit and loss of a firm. For example, Company X might have a debt of 5 million and interest charges of 400,000, while Company Y might have debt 50 million and interest charges of 4 million. So, the given here is magkano ang utang, magkano ang interest. Hindi natin pwedeng i-analyze kung magkano ba ang ability ng bawat isa para makabayad. Ngayon, by comparing cash firm's debt to its asset, ay by comparing the interest it must pay to the income it has available. So, the comparison, yun yung tinatawag natin na ratio analysis. Kasi 'di ba, if you have debt, dapat you have enough asset para makabayad ka doon sa utang. And if you have interest naman, dapat you have enough income para ma-shoulder yung interest expense. That's what we call ratio analysis. You need to know how many percent ang utang mo sa income mo. Last is the cash flow analysis. The cash flow analysis, the actual movement of the cash into and out of the business is cash flow analysis. The flow of cash into the business is called the cash inflow. Similarly, the flow of cash out of the firm is called cash outflow. The difference between the inflow and outflow of a cash is the net cash flow. So, the cash flow analysis refers to the examination of analysis of the different inflows of the cash to the company and the outflow of the cash from the company during the period under the consideration from the different activities, which include operating activities, investing activities, and financing activities. So, cash inflow is the money going into a business. That could be from sale, investment, or financing. It's opposite of cash outflow, which the money leaving the business. For example here, the cash inflow and the cash outflow. Sa sales, 800, then minus increase in debtors, plus increase in liabilities. Sa cash outflow naman, purchases 500, minus increase in supplies, plus operating expenses, plus financial costs, taxes, dividends, minus increase in other creditors, plus investment, and plus delta short-term securities. So the surplus cash inflow over the outflow is zero. Walang sobra yung inflow doon sa outflow. So, it made the list monthly cash inflows and outflows over a year's time. It not only projects the cash balance remaining at the end of the year, but also the cash balance per each month. So, cash flows from investing activities is earned cash or spent from investment your company makes, such as purchasing equipment or investing in other companies. That's all. Thank you.